Hey traders, this is Jeff from zentrader.ca and tradewithzen.com. I wanted to give an update before the Fed comes out and speaks tomorrow. I'm expecting quite a bit of volatility over these next 2 days. Tomorrow we've got, like as I mentioned, the Fed. Thursday we have a full moon. Let me just go to Dow chart. You can see we've really rallied strongly. And heading into a Fed, it's really difficult to see us, even if we were to pop another 110 points, we're going to run smack dab into resistance. So now's the time to be cautious. I've done some selling this week. I'm still about 50% invested, and I bought one stock today. So I'm not letting the sheer magnitude of this move stopped me from buying long. I'm just not getting crazy. I was 100% invested here a couple weeks ago. So let me just get right to the timing signals. And this is a really weird time in the markets. I don't know as if I've ever seen this happen before with my timing signal. And what it is my NASDAQ is still bearish. And the reason why is the long term is bearish. The short and the medium are both bullish. And this is the case with the Dow and the NASDAQ. And when I say I don't know as if I've ever seen it, I don't know if I've ever seen the long term remain so stubbornly in one direction when the short and the midterms are saying another thing. Plus, on the NASDAQ, we're hitting new highs. We're close to it on the Dow, so it's a little bit of a weird trading situation that we have here. The TSX has been bullish ever since July. It has never flipped, and we're starting to see some strength in the form of sideways action versus gold. Gold has just been going down, and the reason why I like to talk about gold in relationship to the TSX is because there's a lot of mining stocks on there, and it really influences that index. But this looks like it's getting ready to I should have extended this line here. It looks like it's getting ready to just bust out. I mean, whatever selling it's been met with near immediate buying. It's just a nice sideways pattern. And it's getting, as I said, it just has that look like it's getting ready to just, but again, everything's going to hinge on what the Fed has to say. So as I said, it's time to be cautious with some conflicting indicators. And I have two charts here I want to show you that if you're bearish, this might make you happy. We really are at extreme complacent levels. We bounced a little bit out of this range, what I've labeled as extreme complacent on the CBOE equity put call, but no volatility right now. Traders are just really content with what the markets are doing, and they're just kind of grinding higher. But this can be dangerous, but at the same time, this in itself is not a signal. As you can see, we can get much lower. So I just wanted to point this out. And the New York Stock Exchange high-low index, this is a worrisome pattern of lower highs. This is not what you want to see. As the NASDAQ, the Dow. This is this line chart is the Dow, and you can see that it's creeping right back up to previous highs, where the percentage of stocks hitting highs is just declining, and this is a bad sign. The market internals are not supporting the move, and so this is something to consider. So when you're taking into account how much you should be invested in the markets right now, especially on the eve of a big event. So, okay, traders, good luck.